Morning, everybody. It's the 3rd of February. We are Signal Centre talking ball a little later than usual today. Apologies for that. But we're here now. And let's get stuck into the latest news, shall we, Steve? How are you
Yeah,
doing,
lovely.
first of all, by the
Yeah,
way?
good. Thanks. Very good.
Sorry, I forgot to ask you.
Very good. We'll. I'm not happy about the gun-to-head trade yesterday. Got spiked out of it, but yeah. Apart from that, all good in the hood. Thank you.
Good. Okay, I'll tell you who's not good in the hood, Facebook shareholders, because yesterday the company faltered on growth in the latest quarter, the first stagnation in the social network's history, stoking concern that Meta's flagship product and core advertising moneymaker has plateaued after years of consistent gains. The company also gave disappointing sales forecasts for the current period, and CEO Mark Zuckerberg acknowledged that Meta is facing serious competition for user time and attention. The Dow outlook has stored user momentum, and the shares were seen as much as 24% lower in extended trading. So, not looking great on the open today. I haven't seen any indications of pre-market readings, but yeah, looking pretty rough for Facebook.
Oh, that's not good.
No. So interestingly, on the sales front and sort of advertising, obviously we had Alphabet coming out with results a couple of days ago. There was no indication from them that there was any issues with advertising. So yeah, bit of a concern for the Meta group.
Not nice.
Yeah, so lackluster results also from Spotify, which is dealing with slowing growth. That's rippled through markets, and we've seen markets on the back foot today, but sort of bouncing a little bit back, certainly in the case of the FTSE 100 as it stands. In terms of what's going on in the geopolitical scene, the US gave the green light for plans to move more troops into Europe and dispatch soldiers already stationed on the continent further east as it seeks to send a stronger military message alongside its diplomatic efforts with Russia over Ukraine. So that continues to bubble under. Today, we've got the Bank of England, who are on the verge of an historic decision to deliver the first back to back interest rates increase since 2004 and take steps to unwinding some of its £895 billion stimulus programme. Investors and economists anticipate the central bank will vote to increase its benchmark lending rate to 0.5% on Thursday. Meanwhile, the ECB is set to decide on how to respond to an unprecedented inflation shock that's prompted traders to ramp up bets on rates going up this year. So lots going on. Let's get stuck into some charts. Steve, is there any particular starting point you want to have a look at today? You mentioned being a bit aggrieved by what you saw on oil yesterday. Is that where we're
Yeah,
going to start?
let's go there. Obviously, we had the oil inventories, and slightly before that, the oil inventories. We got news that spiked the market higher. On the alley chart, we can see here between 12 o'clock and 2 o'clock, we got this evening doji star formation. So we had the big spike higher, stopped little old me out and a few others, and then jumped back into the range. We can see on the 4-hour chart this range that has built up. You see the spike that's taken it out, formed a shooting star. Negative momentum on the 4-hour chart still. So I think there's still, and again, it left us with another indecisive day yesterday. Pretty strong amount of indecision. 5 dojis on the spin, looking pretty negative as well. Is this, with the MACD crossing over on the daily chart, is this a short-term top that we're forming? Really need to get a break of the 85.70 level. Yeah, 85.70 level on the WTI crude, and maybe need a break of 87.40 on Brent crude. Natural gas has had another spike higher, and it's run into this trendline resistance that we were talking about yesterday. So this is the daily chart poking its head above this potential trend line. It was, because it only had 2 points connecting, but then now there's a third point connecting it, and today we've seen a little bit of a pullback. So natural gas just got up above that $5 level and then pulled back. We did sort of highlight a potential for this flag to sort of like propel things higher yesterday and test these levels. So I think there's still we've still got 525, I think, was the second level. We've got another level at 548. But we've seen a bit of a retracement, bit of a pullback, maybe before we retest that high level. On the oil, this is a 4-hour chart. We've seen a correction from the dip down to 1780 continue. A little bit of an impulsive move or a corrective move if you're looking at the smaller time frames. And yeah, we've stalled at 1810. So for me, 1810 to 1815 is resistance. Really needs to clear 1795 on the downside to re-engage this potential for further negativity. Got my dog whining in the background. So a little bit of a corrective formation, potential bearish flag. Let's see if we get a break of the clear break of the 1795 or even a break of 1800. It could add a little bit of negative momentum to gold. On the crypto side of things, Bitcoin has stalled around about 39,300. Lots of indecision here, trading around the Ichimoku cloud on the 4-hour chart. On the daily chart, did highlight this corrective channel, but I suppose, what was the high we got there? Yeah, that was the high, 39,250. Bit of an evening doji star there. Nice reversal this morning. Really needs to clear 36,640 on the downside to potentially trigger this bearish flag type of formation that we're seeing on there. Indices, FTSE still looking quite solid on that side of things. Obviously, oil provides a little bit of support there, as well as the energy sector on the FTSE and the banking stocks. Obviously, they're looking at more aggressive interest rates. So DAX, however, yesterday didn't perform too well. Put a new high in at 15,742 and then reversed sharply lower. We've got a level here coming in at 15,530. A break of there could put pressure on the downside, although we are getting this negative momentum seems to be stalling. Looks like we're going to get a crossover on there, so could bring a little bit of volatility into it. After 6 positive days, we've off to a slower start this morning, a bit of a reversal from the highs, 35,700 we stalled at, and coming back lower from there. Nasdaq has actually formed a bearish outside candle on the daily chart. So for me, that's pretty damn negative. Broke above the 50% Fibonacci retracement level. We said this would be a little bit of a level where it found support before at the 15,200 and actually got up to 15,278 before reversing and giving up all of yesterday's gains. Really needs to see a break below the 14,752 to open up further downside. So I'd keep an eye on Nasdaq. That is one, especially
Head
after.
and shoulders.
Yeah, that'll do, donkey, won't it? I know it's you know when they have this downward sloping neckline.
Worst ones.
They are the worst ones. So yeah,
The worst is
potentially.
in they have the worst consequences, not the worst is in the worst setups. I mean,
No,
I'd be
yeah,
going by a break of that low though, rather than waiting for the
yeah,
downslope.
yeah, 13,720. I'm actually considering this as my gun to head today.
This is the right shoulder, right? I've actually already got it lined up. But yeah, that
Yeah,
bearish engulfing yesterday into that fib level just stinks of a right shoulder for me. So I think we're going lower.
yeah. Let's draw it properly up to here. Left shoulder, neckline, head, neckline, right shoulder, and then lower. So there you go. That's it drawn properly. Well, it's not properly because I didn't. There we go. Let's do the measure move target on this one. This will be interesting. I mean, I've been trying to sell Nasdaq for weeks
Ever in
and
a day.
weeks. Yeah.
Oh, were you going for the break of the neckline or the
Yeah. Well, okay. Let's go from here.
down to close to a 61.8% of the whole move?
Yeah. Between 50 and 61.8. Sort of like lines up a little bit with this area of support here. So yeah, why not? I mean, that will be a bit of a capitulation from the levels we're seeing now. So yeah, that'd be the measured move target. And if we sort of like look really closely at the previous head and shoulders formation, we can see that we sort of like got back up to sort of try and retest that neckline. Let's drill down into that when we got more time. On the this is what I had drawn, looking for this right shoulder, and if we have got it yesterday, the measured move target on this baby, I mean, you could actually
2% retracement, isn't it?
Yeah, 38.2% retracement on the whole move. And that's just a normal retracement. That's not sort of like the end of the world scenario, but it's because of the heady heights and the high numbers that we're pumping out on the indices, it feels like a huge move. Yeah, so that one to watch on there. Remember the China 50, and the level I'm watching is 14,500. That will be the day that we see blood in the streets.
I thought he was going to break into song there.
That'll be the day. I don't know which song that was. That could have been like 3 or 4 different songs mashed up into one. I'll let you take over now, Joe.
Oh, thanks, mate. So I gate crashed there.
That's right.
Yeah, this is. I was drawing not as neatly as you. This is my Nasdaq drawing, freehand. So that's what real technical analysts do.
That's like one of the ghost set of Ghostbusters, like the
okay, dollar index, not much to report yesterday, further declines, but we are posting a bit of green so far today. Looks like we're in a corrective move lower on the dollar index, but ultimately expecting buyers to step back in on this at some point and continue its ascent within this bullish channel. Taking a look at euro US dollar, that stalled into resistance yesterday at 113.00. We had a little bit of a look above it, but closed back inside that level and posting some red today. So I think this move higher was probably just a bit of short covering, but I do expect the downtrend to persist on euro US dollar for now. Looking at cable, that rallied again yesterday, but is stalling a bit today. Bounced quite nicely off the 61.8% fib level. I mean, we can start looking at even tighter fib levels inside that. It seems to be a market that's respecting fib levels quite well at the minute. So maybe consider using those if you are trading cable at the moment. But ultimately, still expecting lower prices on that. Euro sterling, not much to report, more of the same really. We closed lower yesterday, and although we've put in a little bit of strength today, it doesn't look like it's going to hold, and still looking for a move down to this 82.75 level, the previous lows from 2019. So look at Aussie, see what that's doing. That posted a doji candle yesterday following a bit of a corrective move to the upside. We've got a doji candle here, posting some losses today, still expecting lower prices here. In line with these sort of big top patterns that we've got drawn on the daily chart. So still looking pretty negative on that front. Let's have a quick look at dollar yen. It looks a bit more interesting on the intraday charts, I think, but what I was noting was this decent uptrend. Obviously, we've stalled a bit. We have looked as though we have definitely made a new high, but it looks as though this is acted as resistance, quite interestingly, on an attempt to get above it. So it could be that we're in the process of maybe forming a little bit of a top here. It's a bit of a wonky one, but maybe head and shoulders taking shape there. Something to maybe be aware of. I think what I was looking at on the intraday basis was that we had a nice pullback to a 61.8% fib level in the very short term. So just going from these lows here to these highs up here, and we got a nice reaction from this 61.8. Quite some large ranges on those candles, but some big bullish outside days. That one particularly at 1 o'clock yesterday, sparking a decent move to the upside. So I thought that was quite interesting. That'll do on the FX front, I think. We'll move now on to the gun to the head trade. So yesterday, Steve, you went short of oil, and we're only just stopped out on that. I think it was a pretty valiant effort at trying to call the top on that, but just got that little bit of a spike through, which is a bit unfortunate. I went short of Aussie US dollar. It did stall eventually, but I closed offside on that one by 11 ticks at 9 p.m. So yesterday we lost a bit. Over the last 2 days, it still puts us ever so slightly ahead by 0.04R. So we've got a clean slate to go again. Steve, what do you fancy today? I know you mentioned Nasdaq. Are you gonna? Is that what you're
Yeah,
going for?
I'm going for Nasdaq, mate. I'm going to go for a big donkey today. I'm going to go for 7-1 risk reward, which is a bit stupid, really, isn't it? But
Nasdaq is the market it happens on, though. I think if you look back
yeah,
at our history of big winners, it is historically in markets like Nasdaq or DAX, which can be quite punchy at times.
yeah. So I'm going to get short here. Have a 100-point stop on Nasdaq, 14,952 the stop. Looking to target the 78.6% fib, which comes in at 14,152. So getting short here at 14,852.
Okay, good luck. I was going to do the same, but
Do it,
let me
mate.
see what else
Do
have
it.
we
We could
got.
really bank a big return if it does come in.
Oh, we could look silly because we both backed the same horse and both lost.
Well, it happens, mate, doesn't it? Only
It
right
does.
40 to 45% of the time, me.
Yeah, okay. I'm going to go for a Bitcoin. I'm going to sell it. Better share my screen, hadn't I? So this is the hourly chart. Just looks like prices are stalling a little bit here. Got a bit of a range forming maybe on the hourly charts. Looks like it could break through this sort of small support zone that's formed. Obviously, pressure is on the downside as we've discussed on Bitcoin, so I'm going to try and sell that. Target a move down to the swing lows that we posted on the 24th of January. So looking for a decent sort of 4-hour return there. Selling now at 36,935. Stop loss at 37915. Targeting move down to 32924. 4-1.
Nice one.
That'll do. Okay, so numbers and data and all sorts out today. We've got Bank of England rate decision at 12 o'clock. That's front and centre. Rates are expected to rise to 0.5%. If they don't rise, then I think we can expect sterling to have a pretty volatile day. It looks as though it's priced in for a 0.5% or a rise to 0.5%. Shortly off the back of that, we've got the 12:45 announcement from the ECB where they'll be talking about their rates. They are expected to leave rates unchanged, but the 1:30 press conference will likely discuss the high inflation readings in the Eurozone at present. So keep an eye out for the commentary that is likely to start coming out from 1:30. Also at 1:30 US time, we have initial jobless claims. Claims expected to fall to 255,000. Not sure how much influence this will have on the markets today, given that we've got non-farm payrolls tomorrow. And then at 3 o'clock UK time, we've got the US ISM non-manufacturing PMI. The index is expected to fall to 61.8, but importantly above that 50 level still, which suggests we are in expansion phase. On the corporate front, we've got numbers from Amazon today. So that is something important to keep an eye out for. So should we have a quick look at our calendar, Steve?
Yeah, why not?
So this is our new corporate calendar as part of our group that we will be marketing very soon. A little bit of a different take on calendars that people are probably used to, but this explains all the corporate events that are occurring today. So we've got 121 companies reporting earnings today in the US. If we filter that down to sort of ones we're most interested in, I suppose, then we've got Activision and Amazon both reporting today. Let's take a look at Amazon. We can see here that the forecast is for $3.63 on an earnings per share basis. And also what we can see here is the history of the most recent earnings events. So the red indicates misses, the green indicates beats when it comes to the forecast versus the actuals. And as you can see, there is a pretty strong history of Amazon beating analyst expectations. We came in line in the previous events. And as you can see, this is what we're expecting today. But looking at sort of previous surprises on earnings and what we've seen of the price action after the events, on average, we actually see prices decline on Amazon over the last 8 or so earnings events that we've published. So that's maybe a bit insightful as to
Yeah, especially after Facebook.
yeah. So maybe you want to be looking either to have no position or take some protection if you're long. or maybe even speculate on a short trade there on
How
Amazon.
very dare you, Joe?
Yeah, don't sell Amazon.
Don't let anyone find out. Anyway, they'll come
No,
after us, won't they?
they will. Yeah. So this is news sentiment, which is quite interesting as well. This is a chart indicating the price versus the news sentiment. So the price is in white, the sentiment is in the coloured section. So obviously green suggests that news overall is positive, red suggests that it's negative. We can see at the moment that news sentiment towards Amazon over the last day has been negative. I guess that's sort of filtering through from what we're seeing in the rest of the tech sector, but also prices starting to roll over a bit. So again, new sentiment may be giving us a little bit of an edge there and a bit of an indication that we could see numbers that aren't particularly impressive today. I mean, these companies have set themselves such massive expectations, haven't they, as a result of
Yeah.
how well they've performed over a number of years.
Just show us that news sentiment again, Joe. I just couldn't see because that. Yeah. So that is over the last how many days? The news
I think it's
sentiment.
the last 24 hours.
No, that's the last
Oh,
date.
well, no,
That's the
sorry.
last
Yeah,
month.
the latest reading, yeah.
Yeah, over the last month, we're sort of right. Okay.
That's a bit odd. Oh, no, I've changed
Oh no,
stocks there.
yeah,
That's
yeah. I
why.
was going to say.
I was going to say that was not what we looked at, was it? Oh, what have I done here? It is really easy to use, I promise.
Yeah.
Where's Amazon gone?
Yeah, there we go.
That's moved stock again, isn't it? Anyway, we'll leave it at that, shall we, Steve?
Yeah, we'll gloss over that. No one's watching. No one's watching. We'll edit it out. Yeah. So that. Yeah. I think it's. Yeah. As soon as we stretch it out, something goes wrong. But that shows it over. What's
Since the
that?
5th of January.
Yeah. So it shows a month's worth of data. I like that. Yeah. So it's still negative news sentiment, and the price has just stalled. Maybe
Rolling
due a
over.
reversal because of the earnings out today.
Yeah.
Okay.
Certainly, the
You've
history
sold it to me, Joe.
suggests
Yeah.
you're going short, are you?
Yeah. You've sold it. Well, I might as well do that. Stick with Nasdaq then, shall I?
Put options. Yeah,
Yeah,
Nasdaq
yeah,
the
why
one.
not? Nasdaq's one. All right.
All right, guys, have a great day. We'll be back tomorrow. And until then, trade safe.